What is good, guys? Welcome back to the channel, and today's topic will be entry techniques. I will show you exactly my discretionary approach, and I will try to give you as good of a breakdown as possible. Before we get into this schematic here, which covers most of the scenarios in my trading and the different entry techniques, I want to give you a quick breakdown on the basics of my discretionary approach. Mainly, there are two things you always want to look out for. The first thing is the market profile cycle, meaning are we currently in expansion, consolidation, reversal, or retracement. Those are the four main market cycle profiles, and that's the first thing you always want to consider. The next thing is the time frame alignment, meaning is my trade aligned with the daily time frame and the hourly, or is it against those time frames? The ideal scenario is always if you're trading with the daily and the hourly, so both the daily and the hourly time frame are trading in the same direction, meaning both are in a buy model or both in a sell model. And if we have that case, then that's the most high probability framework for my system. In this case, you can use turtle soup entries as well as lower time frame confirmation once the turtle soup has been confirmed. Now let's say the daily as well as the H1 are against me, right? So daily plus H1 are against me. In this case, the only way where I enter a trade is if I have a lower time frame double confirmation. In this case, for example, we got a repulsion block, which is once price has traded into an order block, then confirms a second order block. That's a repulsion block. And in this case, that will be my double confirmation. But it can also be a BPR or any other sign of lower time frame change in order flow. You can watch my video on change in order flow if you don't know what I'm talking about. Then the third scenario is, for example, if the daily is against me, but the hourly is on my side, right? Daily against me, and the hourly is on my side. And in this case, I only use a lower time frame confirmation. No turtle soups, but also I don't need a double confirmation, but at least one lower time frame confirmation. So now, if we keep that in mind, and now go over to that schematic here. As you can see, in this example, the daily order flow is bullish. Obviously, the same applies if the daily order flow is bearish, just this entire thing vice versa. First scenario, this often appears, for example, if you're trading a weekly one-shot, one-kill framework where we try to play the weekly range, then we wait for price on the daily time frame to hit a weekly or daily key level where we expect a continuation of the daily order flow. In this case, before I get into a trade, I want to wait for an hourly confirmation. So price is trading here into the daily key level, for example, fair value gap, order block, whatever it might be. At that point, before I look for longs, I wait for the hourly to turn bullish, and then I can look for my entry here after an hourly confirmation. Let's say price continues with a bias, and we are now bullish on the H1. So in this case, we then have daily and H1 being aligned, which then comes to the second scenario. If there's a valid turtle soup entry, like here, we have a weak low, we also have an invalidation which offers a decent risk reward. For example, we got here a key level which acts as invalidation, or another strong low which formed in this dealing range. Then I can turtle soup weak lows and aim for the higher time frame objective. And if the turtle soup is getting confirmed here by a lower time frame confirmation, then I can pyramid into that turtle soup on this entry here, and at the same time I move my stops to that strong low which forms after the confirmation, meaning I can enter turtle soup here and then add more risk once I can modify the stops of this position and below this low. I've also made a video on pyramiding in more in detail, which you can watch as well, but that's the main idea. And those entries are valid until we meet the higher time frame objective, which can be an old weekly high or low, for example. And this can form multiple times, right? Every time we see a form of reaccumulation inside that expansion phase from the key level into the objective, you can apply those entry models. Now, the next phase of the market is usually we are trading a consolidation after price has hit that higher time frame objective. Once we hit the objective on the higher time frames, price will always go into a consolidation. And then the question is, are we going to keep expanding higher, or are we going to reverse from this old high, like in this case? What most people do wrong here is they either try to force a reversal and short here too early, or they keep longing blindly in that consolidation and just expect price to go up straight away. Now what you want to do here is you want to reduce your trade frequency and you don't want to engage within the mid-range here. What price usually is doing is once we hit the objective, we retrace, engineer a higher time frame weak low inside that last dealing range we form on the way up, and then price usually consolidates a bit, engineers liquidity above the highs and the low here. And what you want to watch out for then is price to eventually run this low, and then you can look for a lower time frame confirmation, usually on the M15 or the hourly, to then look for a play into the range highs again. In this case, you don't want to apply turtle soups, since price is in a consolidation here and can sweep that low here multiple times, right? As you can see. And to avoid getting stopped out or stuck in a position which is just in consolidation, you want to wait here for a lower time frame change in order flow. And as mentioned, a double sweep pattern occurs quite often here, since we are in a consolidation. And price can revisit the range lows multiple times. Now, let's say we sweep the low and then get a confirmation. We can aim from the range low to the range high. Again, you want to avoid trading within that range unless we have seen a manipulation to the range lows or the range highs. And then we can aim to the opposing side of the range. In this case, we can aim for the range highs. Now again, in this case, you want to TP mainly above the range highs. You can also leave a small runner for potential continuation of that bullish order flow. But since we have hit that objective, you also have to be open to the scenario that price could potentially reverse here. Also, in this case, you also always want to put your eyes on DXY. Let's say this is the euro or pound chart and you aim for the range highs. As we could form here potential reversal, we often tend to form S&T here at those highs. Meaning euro, for example, doesn't need to trade above this high anymore if DXY has already taken out this respective low. Meaning if you get into longs here, aiming for the range highs, you have to watch DXY. If DXY takes out this low already, but euro has not swept that high yet, you have to go break even, or you can TP early here in anticipation that price could form here at top with SMT and then reverse. Now you can also play that range from the upside back to the downside with the same scenario, but in this case you have to be aware that you have to use lower time frame double confirmation, since in this case if you trade from the range high to the range low, you are trading against the daily order flow, while if you trade from the range low to the range high, you are trading still with the daily order flow. Then let's say we have a reversal here, so we consolidate and then put a reversal and then turn bearish again. The first opportunity to go short is always the low risk sell after the reversal. Same as we form the low risk buy down here to go bullish, we form the low risk sell to go bearish. Here again, you want to avoid to turtle soup the low risk sell. Let's say we print this first bearish dealing range, and then inside this dealing range we have like a weak high. And you now want to turtle soup this weak high in anticipation that price will print here the low risk sell, right? That's the low risk sell, this one here. You don't want to turtle soup this short here, because price could easily, for example, after running this low, continue being bullish and run the highs again. And to avoid getting stopped out here, you want to wait for price to give you a lower time frame confirmation after we sweep this high, and then once we displace lower, you can enter here. which is then this setup. Again, why? Because price could run the short-term low and continue being bullish, and this is a simple trick to avoid a loss in a lower risk sell, or obviously if we inverse this entire example in a lower risk buy. But let's say price confirms the lower risk sell, you get into a short here, and then price follows up with that bearish bias, and we keep dropping lower. Then in this case again, we have the higher time frames being bearish again. The daily here can be neutral or as well also already bearish, depending on if we invalidate some bullish PD areas here on that way up. Then if we are bearish again on the daily, you can apply the same logic again here. You can short turtle soup highs if we have a valid turtle soup set up, or you can wait for a lower time frame confirmation to pyramid into or get your first position into if there was no valid turtle soup entry. Now let's take a look here at UCAD, and I will show you exactly what I mean. We could see here price on the daily time frame. We are overall bearish, as you can see, and then we saw price retracing into some bearish key levels, this daily imbalance, and we sweep those daily relative equal highs. Now, I was anticipating price to continue being bearish here from this high and to print the lower risk sell here. If we go down to the H1 then, you can see here price taps the key level initially, runs lower, and then in this case you can see here we have this dealing range low, the short-term low. We run the low, and then price can do two things. It can either now be bearish from here, confirm the lower risk sell, if that's already here the reversal, and be bearish. But again, since we are still bullish overall in the higher time frames, this could also be now a stop run to run the range highs again and continue the bullish order flow. The key level is still being respected if we run the high one more time. So the bearish scenario, the bearish bias, would still be valid if we run the highs again and then print the reversal. Therefore, you simply have to wait for price to retrace here and then wait for a lower time frame confirmation. For example, those other weak highs here, which I told you, in this case, you don't want to turtle soup. Instead, you want to wait for price to trade above and then give a lower time frame confirmation. You can see here price traded above and never gave any lower time frame confirmation. Price just traded above and slowly grinded higher to then take out the range highs. If you short this here blindly with stops above here, you get stopped out, right? But simply by waiting here for a lower time frame confirmation, you could avoid this loss. Now again, we still have the bearish bias since price is still trading at the same key level, and we just have now here a double sweep on the higher time frames of that manipulation into the key level. So again, we go to the hourly and wait if we can now print the reversal here off of that high and then form the lower risk sell later on. And now we can see price on the H1 again turns bearish. We form this bearish OB here. And then price trades into OB, closes below this up close candle, so we have here an hourly propulsion block. And again, we run the low of this dealing range, meaning price could again run higher here. So again, this time we do the exact same thing. We wait for price to return to repulsion block, and then we want to see if we can frame a lower risk sell setup to then short. So price approaches the key level here, and now we wait for a change in order flow out of that propulsion block, which would then confirm here the lower risk sell after we have confirmed here this reversal. And as you can see, we did close now below this up close candle. I mean, that's now a bearish change in order flow. And we can expect price to sell off from this OB into at least that low and potentially this low here. So we can short the OB, stops above the high, and first TP would be that low. And as you can see, price printed the lowest value, then sold off and hits the first TP, and then also continues into the second objective. And now again, here we are bearish then on the H4 and the H1. And now if we check the daily time frame, you can see as well, we did close back below this fair value gap, which we use as resistance, then closed above support, close back below. So now the daily is bearish again, and we can expect price to run into that low here. Meaning here we can now use turtle soups and lower time frame confirmation if we have a valid turtle soup setup. If not, wait for the lower time frame confirmation. Now I hope you guys got some insights into my entry techniques, and if you learned something new, leave a like and a comment and subscribe to the channel, and see you guys in the next one.